Good evening, friends, and today I am going to discuss some interesting data which you will thoroughly enjoy that. And that's the beauty about our future trend. We come out with the data that you can use in your investment life to make a very more informed decision. So I'm going to discuss about that. But before I begin my webinar, just a small disclaimer that this webinar is only for an education purpose. Please consult your financial advisor before buying or selling any stock. Investment in securities market are subject to market risk, and past loss should not be construed as an indicator of future returns. With this, let me give you the 6 trends that I'm going to discuss, and of course positive and the negative trend besides the 6 points. How Nifty 50 has changed in last one decade from December 2013 to December 2013 in terms of top 10. Who basically, which are the companies that account in the top 10? We all know that mutual fund has received a huge amount of money in 2023. 50 lakh crore is the AUM. So where are these mutual fund managers putting their money? In which sectors they are putting their money, and which sectors they are taking their money out? I'm going to discuss that because that will give you an idea where the focus is in terms of the investment. There is always a debate between value and the growth, and is value making a comeback? And I'm going to discuss about that. Telecom as a sector is reduced to only 3 players, plus BSNL, that's 4 players. And 4G is a name of the game and 5G is a name of the game, am I right? So what's happening with the Geo on this one? That's I'm going to discuss. Which are the best performing industries globally in last 1 year? And the beauty is that India is among them, and India's falling water reservoir. And I think it's a little concern. Why am I saying so little concern? For the very simple reason, data looks little bleak. So I'm going to discuss, and of course we discuss the implication of that in the market, in the economy, and so on and so forth. So please listen to me very, very carefully because I'm going to discuss 6 important trends which we believe will be very helpful in your investment decision. So what happened to the Nifty 50 in last 1 decade? So what we did is that we went to NSE website. We look at what was the top 10 has a weightage in December 2013, and same way which are the top 10 in December 2023. Just a one small clarification. When you see HDFC Bank, that includes HDFC and HDFC Bank, because in 2013, HDFC was a separate entity altogether, which got merged with HDFC Bank, and to make comparison little proper, we have merged this. So if you look at it, HDFC Bank in 2013 had 12% weightage. That time it was a separate company. So 12 has become to 13. But the most 2013 mein ITC was the highest weightage in the Nifty 50, which was 8.6, which came down to 4.3. In other words, its weightage in last 1 decade came down by 50%, almost half, or not almost, exactly half. And that has been the case with this. Okay, so of top 10 in December 2013, 5 companies have seen their weightage coming down. Which are those? ITC, Infosys, TCS, Tata Motors, and ONGC. In fact, ONGC, Tata Motors, and SBI, even though they are part of Nifty 50, they no longer feature in top 10 in terms of heavyweight in Nifty 50. So if you look at the Nifty 50, top 10 would account for almost 55-56% of total Nifty 50 weightage. And if you go down to top 20, it would be near about 75%. So in other words, even though there are 50 companies in Nifty 50, the 20 companies are going to decide which direction Nifty 50 is going to go. Why? Because they almost account for 80% of the total weightage in Nifty 50. और वो 20 कंपनी में ज़्यादा गिरावट या ज़्यादा बढ़त नहीं हुई, probability is very high that Nifty will be able to move up or down in this way. And of course, I'll come to the sectors also a little later in my next slide. But very interesting, Axis Bank, Kotak Bank and the Bharti Airtel moved into top 10. They were there in the Nifty 50, but they now moved to top 10. What I believe, and the reason why I'm saying this, the way ITC is no longer the highest weight in the Nifty 50, same way, if I have to fast forward in December 2033, HDFC Bank may not be the highest weightage in Nifty 50. Change hoga, whether we like it or not. And that change, and see what has happened is that one more thing which really surprised me is that the highest weighted, because HDFC and HDFC Bank is combined, that's why it's 12%. But the highest weightage in 2013 was ITC with 8.6% only weightage. Today, one single company, that is HDFC Bank, commands 13.5%, double digits, which was not the case in December 2013. What does it clearly gives an indication is that this weightage cannot continue for a long. This higher weightage cannot continue for long for HDFC Bank. It has to somewhere see some amount of a reduction in the weightage. Beauty with HDFC Bank or Infosys or L&T or so on, ITC and so on and so forth, there are no identifiable promoters. And due to that, the Nifty 50 is a function of free float market cap. What is free float market cap? Market cap excluding promoters stake. So, like even though the Reliance may be the most valuable company in the country, but still does not have that weightage as high as HDFC Bank. Why is that so? Or TCS has very low, what we call a weightage, only 4.1 as of December 2, despite it's the second most valuable company in the country, because of promoter stake. Because when they compute give the weightage, they exclude promoters. So TCS has identified promoters in the form of Tata Sons, and due to that, the weightage comes down. In Reliance case also, Mukesh Bhai Ambani is a identified promoter, so that it reduces that. So if you wish to understand whether market will go up or not, just focus on top 10 companies. And if they don't move, probability is very, very high that Nifty 50 will not move. And if these 10 companies decline, probability is very high that Nifty 50 will decline. So now if you have to form an opinion about the market, look at how do you see these companies, 10 companies are going to perform in 2024. And if you do that, probability of you going right with your prediction is very, very high. And that's why I say always become a smart investor, understand the data, understand the driver, and once you understand the underlying factors, probability increases that you will become a smarter investor. Now let's look at the sector. No major change, I must tell you that. In 2013, the banks and computer, that is IT software, were accounting almost 42%. Same thing is there, 42% even for December 2023. In other words, again a smart way of understanding Nifty 50. What is that? If Nifty 50 has to really do well, at least bank or IT software has to do well. If both are underperformer, market will go down, whether we like it or not. That is when I say market is Nifty 50. So as simple as that, you need to understand and then focus on that. If your view on the banks is negative, if your view on the bank IT software is negative, probability is very high that Nifty 50 will close in the red. And reverse the situation. If your view is positive for banks and computer software, probability is very, very high that you will make money. Nifty 50 will make money. What has surprised me is that once upon a time, company like Tata Steel and so on and so forth were having a very significant presence in the sector. Today, you don't see in top 10 sectors in that cement is there, but you don't see still be part of this sector. And of course, cigarettes purely because of ITC. Now the mutual fund manager. Can you make a guess that, the PSU index was PSU bank index was one of the best sector for 2023. But when we look at the data, it clearly says that in every quarter, mutual funds sold in PSU bank. That is Jan to March, April to June, July to September, and September till October till November. This data is till November 2023. We don't have the data till December 2023, and that's why this data, this is there. Now, if you look at it, they've been seller. Now, you sometimes I presented in one of my presentations that how mutual fund have underperformed in last 1 year, they benchmark. And the reason is very simple. Where they're supposed to put money, they have not put like real estate has been the best performing sector last 1 year. Look at the allocation of the total money that this one invested, only 1% gone to the real estate. Then how can you outperform? The NBFC allocated 28%. But as you all know, 2023 NBFC was completely underperformed. And that's where it explains where they are putting money, and then probability of increasing their outperformance goes down. So this is where they put it. NBFCs and IT almost accounted for 45%, and if I include healthcare and auto, which is another 25%, that means 30 plus 28, 58 plus 12, 70. 70% of the money has gone into top four sectors by mutual funds receiving a huge amount of money, am I right? And this is where they are parking their funds. So if this four sectors accounts for 70% of their money that they received, NBFCs which underperform, IT which has outperformed, healthcare which has outperformed, and auto which has outperformed. But the one that really did extremely well, real estate, they invested only 1%, that is 1,200 crore. And PSU Bank, which did well, they actually sold worth 12,400 crore. So is the case with industrial. And of course, private sector bank, they sold it, net I'm talking about, rightly so, purely because it did underperform in 2024. Again, the reason I'm sharing this data for you people to understand where some of the best brands in the country are putting their money, which sectors they're betting on in terms of putting their money. If you want, maybe in the next presentation, I can also give you quarter-wise how Indian fund manager basically invested in every quarter, taking it to 33,100 crore for YTD and so on and so forth. So do let me know, and I can share the data also. Is value investing making a comeback? 2023 was out and out growth, and that's what we predicted also in the beginning of 2023. I think 2024 seems to be giving some different kind of a flavor. If you look at in month of December, value outperform growth. I again repeat, for the month of December, value outperform growth. Why 5.4 versus 4.5? Probability is very, very high that value can outperform in the rest of 2024. Probability is very, very high. And one of the reason I said why, because risk on is going away, risk off is making a comeback, and if that is so, it makes a lot of sense for value to outperform. Of course, we'll keep sharing that data. The reason I'm sharing this data with you, because you can make a nice strategy based on this. Okay, that where the money would be going, and if that is so, how you should be doing your stock selection in your portfolio. Jio losing the market share, and I really don't know whether this market share includes 4G or 5G or not. I must be very honest with you. But right now it does give us an impression that Somehow Airtel has been able to act a little smarter way to increase its market share from 28.2 to 29.5. No brainer that Vodafone Idea has been declining, and it is declining because they are not there. But Jio, when I look at the data in 4G market share, it came as a surprise. 53 point has gone down to 53.2, which is little surprising. When you look at how the market now behaved, stock market gave the returns to this investor. Bharti Airtel moved up by 42%, while Reliance Industries moved up by only 22%. Of course, that Reliance is also a function of Jio, retail, its petrochemical business, its exploration business, and so on and so forth. But having said that, I think I would have expected Jio to keep increasing the market share because they claim that they have a better coverage. And if you remember, in one of my future trend, I also presented how ARPU of Jio versus Bharti Airtel versus Vodafone. Bharti had the highest ARPU per customer, and despite having highest ARPU, if you are able to increase the market share, it's a good thing to happen. Am I right? What comes as a big surprise is that in last 1 year, Vodafone Idea has moved up by 117%, despite losing the market share. Now the learning is there. Learning is this: in the market, you do have a fundamental factors, but there is something called news also. What are the news that is happening in the Vodafone Idea? That some investors will come. If that comes, they will make this company more robust, and it will start regaining the market share. And that's the story that market seems to be playing on. So sometimes numbers may give you some data, but the reality would be a little different in terms of stock market performance. And hence, one has to take a very holistic approach when you invest in the equity market in any company. You need to look at not only the financials, but the underlying theme in the market. Is there a tailwind for the sector? There can be all negatives priced in, so and so forth. And the market seems to be believing that Government of India will not allow Vodafone Idea to collapse. They want 3 players, and that's the hope investors are pinning on, and that's why they can turn out to be the best performing telecom stocks in last 1 year. So that's a learning that I want everyone to imbibe in their investment journey. Now, which is the best performing stock indices in the world? And you would be surprised that India is on the top. Nikkei 225 gave 36.2% return, followed by Nasdaq, but Nifty 50 and Sensex almost giving up 21 to 22% return. S&P 500 again 19.5, Taiwan, Italian, and Hang Seng, Shanghai, Philippines, and British, they basically show a negative this one. So India is among the best performing stock indices in the world in last 1 year. Probability is very, very high that we may continue to do so even in 2024, despite our prediction is that market will remain range bound. Why? Because other markets can continue to fall. India would, even if it has to come down, the fall may not be so substantial, and hence it could be in a top quartile. That's what our sense is, purely because of in China plus one story, investors' love for the Indian equity market, retail investors' flow, and so on and so forth, would continue to make India among the top quartile. Now, this data is a little disturbing. Why it is disturbing? Because of this reason. What you see in a blue font is this year reservoir level as compared to last year, which is less than last year. But if you see red, that means it's not only below last year, but it's below 10-year average also. So for example, let me explain you this data first. You look at Himachal Pradesh. It is at 56 reservoir level, 56% of the capacity of this one. against 58% last year. So it's lower, so that's what, but it's higher as compared to 10-year average. Am I right? That's why it's a blue. In case of Punjab, it's at only 25%. In other words, 62% was last year, it is still lower, and 40% 10-year is still lower. Now, the reason I'm telling you, and it's a part of our future trend, what does it mean? There would be a water cuts, whether we like it or not. This may not happen maybe during election time, but once election gets over, I think, because if you do the water cuts during election time, your probability of winning goes down. It will help the opposition party. But if that happens post-election, then there is no damage. But I think it's a need of this. And when you look at the data, it's a little scary for a state like Punjab. 62% last year versus 25% this year. 10 years was 40. If you look at Bihar, for example, only 30 versus 44 last year and 48 previous year. Uttar Pradesh is little scary, but not the difference is not too much as compared to the last year. But Maharashtra, again, very sad situation. Arunachal Pradesh is definitely a very sad situation. Andhra Pradesh and Telangana, I think that's one state, can face a lot of water shortage. And so is the case with Karnataka and Tamil Nadu and so on and so forth. Some states which don't have to bother much about, Gujarat continues to be at 75%. Jharkhand was 71% last year, again 70%. Odisha doing well. West Bengal has done well, 39 versus 59 versus 56 of 10 years. But having said that, the vote you see in the red, I think is little cause of concern. Do expect water cut in those states. I believe AP and Telangana is a little problematic as we speak to you. Arunachal Pradesh is a problematic, and so is the case with Karnataka and Tamil Nadu. So South mein AP, Telangana, Karnataka and what we call Tamil Nadu are a cause of concern. Now, how does the water reservoir moves? So what we have done, basically we looked at from last 1 year to this. So last year we were about near 49,250 million some liters, okay, which are right now at near about 49,000 something overall. Now this is the way water keeps falling. The reason I'm talking about why water cut, because as the summer comes, your water level start dipping like this way. And it start moving up somewhere when the southwest monsoon start moving up. For some reason, if the southwest monsoon gets delayed, then we could have some concerns to be worried about. And hence, this data is very, very critical. If you look at as of 11 Jan, we are at 81% of as compared to the same period last year. And as compared to the last 10 years, it's 95%. So I think the data just gives an indication that if we are not very careful in our water, how we use the water, we could face a problem in terms of. So my request to all of you is that be cognizant of the fact that water reservoirs are falling. Please consume water in a very meaningful manner. Now, what could be the implication of that? The implication is definitely on the agricultural production, on agrichemical and fertilizer. If the water reserves keeps falling, some of the states may announce that we will not supply water to the industrials, and that could hamper industrial productions also. And it would also increase your budget. Why? Because if you have to buy the water through water tanker and not through the pipe line, your budget towards the tanker will go up, which means you will try to spend less money on some other items, because without water we cannot survive. Am I right? So it's a little concerns. And what we'll do, we'll again revisit this data somewhere in the month of March and April, because that time, as you can see, it falls very substantially. So we'll try to see what happens at that point, because right now the prediction is that El Nino impact will get tapered off by July 2024. But is it going to push the southwest monsoon to instead of June to July or so? Then I think we could have some amount of a worry to be taken. Should be worry about the water level. what is the positive trend? I think GST collection is good, so is the case with direct tax collection. So if you look at the direct tax collection, gross is 17.18 lakh crore till I think 10th January or so, that is okay, which is shown a growth of Y on Y of 16.77. At the same time, what is net direct tax collection? Is Government of India issuing the refund. So if you take out the money that Government of India received and the refund they've issued, it stands as 14.78 crore, which is nothing but 19.41% growth in the revenue collection, which is extremely good collection, which means that government will be able to manage the deficit in a more meaningful manner. Now, where does this, let's look at the breakup of this direct tax collection between the corporates and person like you and me, personal income tax. So in corporate, the 12.37% growth is there, Y on Y, versus 16.77 if you look at it. Why? Because the personal income tax grew very smartly at 27.22%, which is a very good happy sign. Why am I saying it's a very happy sign? In other words, people income went up. If the income went up, that's why they paid the tax higher tax, am I right? Because Government of India has been reducing slab rate some in a very marginal manner. So there is no because of hike in the tax rate, because more better compliance and better income, and that should ideally should help what will consumption kind of upcycle. But right now we don't see that happening, because yesterday I made a presentation, I did mention about how consumption cycle seems to be taking little backseat. But the personal income tax is increasing, which is a very good sign. That means the people income level are increasing, and which is a very happy sign for the exchequer, which will help us to keep our deficit also under control. Inflation has started inching up. It is not a cause of concern, it's inching up. And if you look at various trend which has died for December, yesterday USA announced 3.5% CPI. Eurozone anyway gone up from 2.4 to 2.9. Today India's inflation went up from 5.6 to 5.7. So everywhere inflation is inching up. Is it a trend or is it a aberration? We need to wait and watch. Very quickly, before we open the floor for question answers, both Sensex and Nifty hit record high and gained about 0.8% for the week. Against that, mid cap was up by 0.5% for the week, but small cap was up by 1.56%. FI have continued to pump in money of near about 3,900 crore, and result season has started. Both Sensex and TCS declared the numbers, and post numbers, they both up by 3% post result. The numbers are not so great, but I think market was taking a comfort that there may not be much downside, and that's why it has happened. With this, let's open the floor for question answer. There is a gap up opening at 20. MM is asking, is it MarketsMojo? MM matlab? No, I'm just kidding. There is a gap up opening between 20,000 traded. What is your take on this? Shall we wait, invest in this market when stocks already overvalued, and wait for some time? So we have a very clear cut, and we articulate well number of times. We said don't try to time the market. If you are already invested in the equity, please reshuffle your portfolio. If you want to put your money, fresh money in the equity market, we are advising invest maybe one third at a gap of 2 months. In other words, today is what? 12th January, you invest today. Invest 12th March and invest 1/3 amount in 12th May. And that's the way you should do it. Yes, Indian market is little expensive. I'm not saying so. But are we in the bubble zone? Answer is no, because this is one of the weakest rally we have seen in the history of India. 8 years in a row, market has moved up with a CAGR of 13% or so. Normally, the bubble gets formed as and when the market goes up by in excess of 30% CAGR, which has not happened. So there is no bubble that can burst. And if that is so, why to try to time the market? I know one investor in our PMS chose not to invest in the month of October, thinking that market chalne nahi wala hai, May tak jab tak election nahi aega, market nahi chalega, and he's losing out big time. I don't know when he's going to come back and invest in the market. And unfortunately, the wait is going to become little longer and longer for him because market will frustrate him. And then once that happens, he will throw in the he will throw the towel in. So I think that's what is going to happen. So my advice would be, sir, I know you are little concerns about the market, but if you are coming with the block of 3 years to the Indian equity market, don't bother about what is the downside. Just look at that you will make handsome money even from this level in a block of 3 years. So my request would be, do not try to time the market. Sandeep, hello sir, what is the future of REIT in India? Can it be considered as a part of portfolio for long perspective like 7 to 10 years, especially focusing on post-retirement income? What is your takeaway? Sandeep ji, if you ask me very frankly, I would not a very big fan of REIT. There are a couple of reasons for that. Number one, REIT allows only right now till the commercial. They don't allow for the residential. So that's one. Number one, I think when you sell that, there's a 3 years a long-term capital gain instead of 1 year capital. So one of the best way to, if you wish to really have a post-retirement income, nothing to beat equity. I must tell you that. I know it's a little volatile, but there's nothing to beat it. So I'll give you a very nice way what you should do. And of course, some experts will give another opinion, but this is the way I would do it. What I will do, I will take out at least 2 years of my monthly expenses and put in a fixed income. 2 साल का. And then what I will do, I'll invest balance amount in the equity market. Now what you should do, that 2 years will take care of because the market can happen, anything happen to the market in 2 years or 3 years or something. But over a longer period of market has to go up. Now if that has to happen, the reason I'm saying you take out that money, so even the market fluctuates, you don't have to dip into that equity investment. You are comfortable with this one. Every 6 months, take out that money from the equity market, irrespective of what happens to the equity market. And keep building another for next 6 months of your monthly expenses. And you keep doing that in a rolling manner, I think you will make a very good kind of a returns and you will be able to maintain your lifestyle without compromising that. Of course, it all depends upon what is your income. And this, I'm assuming that your income and your investments are good enough to take care of your post-retirement life. And this is the way, if you do it, I think you should be fine. In fact, not only you will have a good life, but you will also see a good wealth being created despite you are spending money in a post-retirement. Still, because what would happen, the money that you're going to spend is going to grow less pace as compared to the money that you invested in the equity market. And if you don't want to take any market risk, go for ETF of Nifty 50. Very simple. And keep doing that every 6 months. Take out the money that you need. For just to give an example, okay. I think people will get confused, so let me give you an example. Suppose your monthly expenses is 50,000 rupees per month. 12 महीने का कितना हुआ? 6 लाख हुआ. 2 साल का कितना हुआ? 12 लाख रुपया हुआ. वो 12 लाख आप उसको साइड पे रख दीजिए. If you want to consider inflation also, 15 लाख रुपया रख दीजिए. अब सपोज आपके 3 करोड़ रुपया. I'm just giving an example. So out of that 15 lakhs, 3 crore 15 lakhs will go for your just one fixed deposit because you want to use that money for monthly expenses because you are retired. Balance 2.85 crore invest in the equity market. Then after 6 months, irrespective of what happens to the market, आपका महीने का 50,000 का खर्चा है, 3 लाख उसमें से निकाल दो ETF में से, if you are investing in ETF. Okay, and keep doing that every 6 months. If the expenses goes up, 50,000 का 60,000, तो 3,60,000 निकाल दो. 60 का 70 हो गया, 4.2 lakhs निकाल दो. And this is the way, if you keep doing it, I think you'd be able to not only sustain but able to create good wealth. If you want me to elaborate further, I'll be more than happy to do that. KV Ramani sir is saying, sir, I'm a Mojo professional member till 2035. I'm also interested in your PMS. My queries are, I already have a Demat trading account. If I join PMS, will I be asked to open another Demat trading account? If so, which brokerage firm? So, sir, yes, we will be asked to open only Demat account, no trading account. Why? because in PMS, the buying and selling would be done by us. So we will open a demat account for use, and then everything what we are going to buy, will buy in your demat account only. But you don't open a new trading account. That we will open. We will do that because we are already tied up with HDFC and ICICI as our custodial. So they will basically be your demat account holder. Your DP, your demat will remain with HDFC or ICICI. And we have a broker like Phillip Capital, Nuvama, ICICI, Kotak, JM, and so on and so forth. You don't have to open a brokerage, new brokerage with them. That we are going. If I assume that we are a resident Indian, if you are non-resident Indian, then you may need to open another brokerage account with Phillip Capital. That's what. But everything is done by us in PMS. You don't have to run around to go to any broker to open an account or something. Each and every paperwork is done by us. The only thing you need to sign the PMS form, agreement form with us. What I'll request you, Amir, just forward the Mr. Ramani sir email to us. I'll ask my colleague to get in touch with you, which will help you to understand how we can go about opening your PMS account. Amir, मुझे भिजवा दीजिए please. Rahul Kumar says, all TV channel anchors and independent advisors are watching your webinars. Sir, if you are saying that's a good news to me, I am not aware, sir. And it is getting difficult for me to bifurcate when to buy or sell in markets. The initial logic of selling when everyone recommends buy does not hold true nowadays. Please help with your logic for identification. Rahul Kumar, sir, I think when to buy and when to sell is going to define what kind of wealth you are able to create. If it has become difficult for you, and we said that in 2024 it's going to become all the more difficult because the market is going to become a range bound. As Mr. Ramani sir wanted to come and join our PMS, I would request you please come and join our PMS service. If you are not doesn't want to join the PMS service, I'll give you another simple advice. We do have a score on each and every company. Am I right? On our website. When the score of the company goes below 60, and the script is falling, get out of that company. Which company to buy? The company, those which are part of Mojo 1, whether it's in a Mojo stroke, part of turnaround, reliable or consistent, anyone that you see, that those companies you can buy, and we will tell you when to exit if it is exit from the Mojo 1. Am I right? So this is the way you should do that. Does Ashwin is saying, does upcoming union budget impact market sentiment? No, sir. See, try to understand this will not be a full-fledged budget. It's just a what on account budget. The full-fledged budget will come post-election. So there will be two budgets in 2024. One is an interim budget and one is the normal budget, which will happen most probably in the month of June or July 2024, full-fledged budget. So no, I don't think it's going to make any impact on the market. Of course, there are various stories being run by some of the business newspaper कि ये होगा, वो होगा. But it will be more, nothing drastic will going to happen. It's more of a basics things. Don't expect too much changes in terms of reforms, too much in terms of policy action. That all will happen in post-election budget. Thank you, sir. Badrinaran, sir. A lot of credit should go to our design team. We have Sai Ganesh who does this beautiful, and you would have seen in last 6 to 7 months, our designs have really improved. It's taken a leapfrog, and a lot of credit should go to him and also to the Amir, who does relentlessly to ensure that how do we make better and better presentation. So thanks a lot, sir. In fact, the suggestion was that I was supposed to wear a pink shirt, but I chose the white shirt, and you liked it, so I'm happy. Lakshmi Singh, are we still? अरे यार ये पेपर स्टॉक तुम लोग ने परेशान कर दिया मुझे. Okay, so are we bullish on paper stocks? As of now, yes. Risk versus return continues to remain in favor of reward, and hence we are continue to hold it even in our PMS. Mutual fund. Vinith is saying, my question on mutual fund, assuming the top rated funds in MM currently will move to sell in 2 to 3 years down the line, and if I had a CIP in them, does that mean that I should stop my SIP and sell the fund? Of course, yes, sir. You should not get married to any fund. वो अच्छा नहीं कर रहा तो क्यों आपको इन्वेस्ट करना है, क्यों उस पर पैसा डालना है आपको ज़्यादा? It doesn't make sense. So you are absolutely right, Vinit, sir. You have a clarity of thoughts. Please exactly do the same thing. Yeah, please. Oh, okay. What is Suresh is saying? What is value and growth index? So, sir, nothing. Value. The growth index is the company which are likely to grow faster, and that is called growth index. In the sense, just to give an example of that, I'm just giving an example. Okay, it may not be part of the growth index, but I'm just giving an example. So, what is growth index? Is that you chase those company where growth potential is very, very higher. They are more like a riskier assets as compared to the value index. In value index, you look at more traditional company which are growing at a very decent pace. You don't see much of a higher growth, but the valuations are very, very good at them. And that get formed in the value index. In growth index, the company where you are willing to pay 100p and 150p in anticipation that there will be a growth in those companies. And hence you are willing to pay that. So those companies will form a part of growth index, and value index will form a part of those index where you see the valuation is very, very attractive. So what happens when there is a risk on strategy in the market? People want to chase growth stocks. बोलता है I'm not bothered about the क्या valuation में चल रहा है, ये company बहुत grow होने वाला है. If this company keep growing at 10 years down the line in the same pace, what looks very expensive will become very, very cheap, and let me buy those. Examples of that like Dixon Technology right now, or previously it was Avenue Supermart, Bajaj Finance, and so on and so forth. The value indexing is more of a company where the valuations like some of the infra companies and so on and so forth, where the valuations are very, where you look at price to book value, price to earning, price to growth ratio, which looks very, very good, and you go for that. So when there is a risk on strategy, growth will do well. When there is a risk of strategy, value will do very well. In 2022, value performed better than growth. In 2003, completely changed. Growth did better as compared to the value. I also like the font because it become very bold and I can read it, because previously बहुत छोटे font थे. I mean, yes, in your webinar for 2022 on January 3rd, I remember you saying that growth will be in focus into that. Today you are putting your emphasis on value. Oh, no, sir. I don't think I've said that growth will be the. I think you need to revisit. I don't think I've said that. Having said that, Thampi sir, I'll also go through what I said. I don't think I've said that. On the contrary, I said value could come back, make a comeback. That's what my memory shows me. But anyway, I'm growing old, so I could be wrong also. But if my memory shows me right, anyway, as I speak to you, let me just see what I've said on 3rd January as I speak to you. I'm going through that, so I don't know which slide I have basically mentioned that. But anyway, I'll ask Amir to look at what I've said actually. I doubt that that's what I've said actually. So I'm looking at it. Oh no, sir. I said very clearly shift portfolio from momentum to quality. I did mention that very clearly, sir. If you can, okay, let me. Is available? सर आप लोग भी मुझे कंफ्यूज कर लेते हो. है दिख रहा है? I said shift portfolio from momentum to quality, sir. आप लोग यार मुझे कंफ्यूज कर दिया. नो 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 सर, तंपी सर, आई डोंट थिंक आई हैव मेंशन दैट. ठीक है. Okay, so Saurabh is saying in the live storage of water slide, you have taken into account the factor that more reservoirs would have been made in last 10 years, hence the capacity percentage might have come down. No, no. So what we are saying is right logically. What I'm saying is that, so okay, I'm saying the average I'm talking about, okay? I'm not talking about the level, absolute level. I'm saying the average of that, what it was there. Am I right? So suppose the capacity was 100 and it's gone to 150. उसके कंपेयर में कितना है? तो इफ यू लुक एट, आई थिंक द एब्सोल्यूट वैल्यू आल्सो एज कंपेयर टू लास्ट 10 इज डाउन. लेट मी जस्ट टेक दैट डेटा. ओके, सिंस यू हैव आस्क्ड अ वेरी क्वेश्चन, तो लेट मी सी दैट. व्हाट यू आर सेइंग, आई थिंक आई हैव लुक्ड एट दिस डेटा, बट एक्चुअली एब्सोल्यूट वैल्यू आल्सो इट्स डाउन. एक मिनट. ओके, आज लोग आप सब मुझे अच्छे से अच्छा सवाल पूछे हो. ओके, लेट मी सी. Okay, so let me give you the value. Okay, so I think that question will get. So okay, the total is 102.126 BCM. The billion cubic meter, if my understanding would be right, as compared to the last 10 years average is 125.536 BCM. In other words, no, sorry, last year's was 125.536 versus 102 right now, and the 10-year average was 107.78 BCM. That data I was talking about 81 and 95%. So its actual value come 85-95 दिया हुआ. It's not that. So even if there is a more reserves been built, yet it is lesser than what it was 10 years back. I hope that makes it very clear. So 102.16 BCM as of now versus 10-year average of 107.787. In other words, there is a decline of near about 5 BCM of the water reservoir. I hope now, so even if the reservoir has been built more, it's still lesser than what it is right now. Ajit is saying, are you investing in PMS now for new customer tranches? Like you said, no, sir. We are not taking. What did I say? Okay, I repeat again. I think there's a lot of confusion happening there. What I said is that in case if you wish to invest in PMS, don't give us all the money. अगर आपको 5 करोड़ डालना है तो अभी मुझे 6 करोड़ डालना, 2 करोड़ अभी दो, 2 करोड़ 2 महीने के बाद दो, और दूसरा 2 करोड़ 2 महीने के बाद. That's what I'm saying. But we are not taking cash calls on the market. Lata Sundar says, please elaborate more on this retirement process that you just explained. I'm close to it, so how should I design this plan? So, Lata ji, what I would request you is that, I just give you a very ballpark kind of a numbers right now. And it would vary from a person to person, because someone could have a hard medical emergency and so on and so forth. It's also a function of what kind of pension that you will get, what kind of medical aid that you have taken, and so on and so forth. What I'm trying to say is that someone asked me that should I put money as a part of my retirement into REIT to get that fixed income kind of a stuff. And my answer was no. My answer is that you should invest in the equity and take out, and as and when you need the money every block of six months from the equity market to run your houses. That's what I said. So if you wish to design, Lataji, what I can do, we can take it offline, where I need to understand all other parameters that you have, so that you can, this is just a ballpark, this is more of a general statement I made. I don't want you to go by general, then you need to look at what are your expenses would be, what is the rate of inflation you believe, which city you live in is also a function. I must tell you, the people, those who live in urban area will have a higher inflation rate as compared to those who live in a semi-urban area, and so on and so forth. It also makes a lot of sense. Even within the 4 metros, the Kolkata will have a lesser expenses as compared to person living in Bombay or Delhi. So we need to. So there are various factors that. Then second thing, how many people are dependent post retirement on you. That's also a factor, and so on and so forth. Second thing, what is the family composition? Are they someone who can take care of you in case of something has to go wrong with you? And so there are various factors at play, ma'am, Lataji, and hence my worry is that I just give a very broad brush to the complete that how one should look at it in terms of doing the retirement planning. Where so some people say, your exposure to equity is 100 minus your age. And I don't believe in that philosophy. I don't believe in that argument. There are people, those who suggest, are really little ignorant about the financial planning. In fact, it should never be the function of that. In fact, as long as the fund that you have secured, which you don't need, the balance, of course, I'm saying you should be a little mindful because equity is all about taking a risk. You should have a risk appetite. But once you have the risk appetite, you should not then hesitate to put money in the equity market because that will make your standard of living better and that will be the best performing asset class in the years to come, equity. And if that is so, then why to get stuck with the fixed income instruments, which sometimes is not able to even cover the inflation rate. So Lataji, my request would be if you are seriously interested in doing more on this, please write to us. I'll basically take some time out for you and I'll explain to you. I'll understand first the data inputs from you and then help you plan the same. Ganesh is saying, does your suggestion phrase reshuffling applicable for model portfolio also? No, sir. The model portfolio हम लोग खुद reshuffle कर देंगे. हम आपको बता देंगे कभी निकलना है क्या करना है. That doesn't apply. Those who are doing on their own, that suggestion is reshuffling to them, not to the. In PM, we are doing reshuffling. You don't do anything. In model portfolio, they will be advising you. You don't do anything on that. Deepak is saying, is there any commitment of returns percentage which comes with the availing PMS service? No, sir. SEBI prohibits any committed assured returns on the PMS. So our endeavor, we believe Indian equity market will do extremely well in next 3 to 5 years. And if having said that, our endeavor is to outperform the benchmark significantly. Now you can make your own guess what kind of returns you can look forward from the PMS. But there is no commitment. There could be a possibility that market may not do well only because some black swan event happens and equity does not do well. In the process, we don't do well. There is a possibility that market may do well and we may not do well. That's also a possibility. Our endeavor is to outperform the benchmark significantly. No fixed return that we can give you. So I would rather not have you as a customer rather than erring on the side of a regulator. NM is asking, or I thought it was another MM. Okay. Good evening, sir. Wanted to highlight probable glitch in stock score, which is the with the model portfolio wants to add in my holdings. One of the FMC companies scored of 88 and valuation turned very attractive from very expensive on the day of stock split. This is a serious concern that can translate into real money loss. I spoke to customers today but could not find resolution. So I think I understand, sir. You are referring to Nestle. I just put this. I'll ask my colleague Karan to look into this. Ja Karan को भी भेज दीजिए please ये message. Your point well taken. Thanks for pointing it out. Our team will basically resolve this. Deepak Gupta sir, hello. Can we have a webinar on retirement fund creation for people those who are in 30 to 40 age group and how plan retirement, both by openers Mohit and Sunil? I think if you ask me very frankly, the Mohit is the right person on terms of retirement planning. मैंने तो कभी retirement planning सोचा भी नहीं किया भी नहीं है because I don't think I'll go to retire ever. So, but anyway, I think jokes apart, Mohit is the best person to do that. Deepak ji, your point well taken. I'll request Mohit to do an exclusive webinar on the retirement planning. If my memory serves me right, I think he did once or he was about to do once. But I think Deepak ji, I think you have again rejog our memory. We'll definitely do it. Just send me this message also. I'll ask Mohit, I'll request Mohit if he can do this. In case if Mohit shows his inability, then definitely I'll be in front of you. And I'll, to the best of my knowledge, I'll make an webinar on the planning, retirement planning. Nimesh is saying, is there a MarketsMojo have a tie-up with PMS Bazaar platform? So we don't have any tie-up with anyone. The reason why we don't have a tie-up, see, PMS Bazaar is basically a platform which distributor uses to market their PMS service. So people look at by performance kya hai and do that. So that's for the distributor. Our PMS, we are not going through the distributor. Why? Because distributor takes away the fees from the manufacturer, that is from us, which eventually basically we charge you people, because manufacturer हम लोग भी खुद अपने खिस्से से दे देंगे नहीं, which increases the expenses. So we have not gone through the distributor route, we have gone through direct route, and hence our data may not be available on a PMS Bazaar purely because we don't sell the data to them. We ask them, why should we sell our data? Because we don't need distributor. So as it's not available on the PMS Bazaar, it's now 8, and Amir is saying that enough for the day. It's almost 1 hour, and then I don't want to have a blame from your family members that I'm holding you back from your dinner. So with this, thanks a lot everyone. I did take your point about retirement planning. I'll definitely request Mohit in case if he's doing. If not, I will come in front of him and do that. But have a great weekend. Enjoy. I know there are festive season in next couple of days. There will be a Lori, there will be a Makar Sankranti. I'm wishing everyone in advance, have a great time, have a great celebration. I'm also going to celebrate, and I will request you to also celebrate the same. Good night, take care.